Hello everyone, it's time for a monthly market update, and as always in this DFW Metroplex we always have a lot to go over in a short period of time. But first, my heart goes out to the people in Ukraine. Please be praying for them. We actually have an employee at our firm that is from Ukraine in the process of coming here. He has family there, siblings in Kiev, and we've also have some other contacts from Ukraine, actually FaceTime with some folks, and just our hearts are broken. Please pray with us to bring this to a quick resolve and take out the evil, is the simplest way to put it. And so just wanted to share that with you, but let's get started on our market update. So let's start there. How does the conflict in Ukraine affect our markets here as far as real estate goes? And the simple answer is that it does affect our markets here. How much it affects our markets here depends on how escalated the conflict becomes in Ukraine. At this point, what we probably will see more than anything, not so much of an effect of in our residential market as the commercial market. The commercial market seems to be the first thing to pull back in any uncertain times, because commercial real estate is nothing more than investing, just like the markets you see on the news, the NASDAQ, the Dow, all those open stock markets go crazy when you have uncertainty. People start selling, hoarding cash, just going to safety. And so what I would expect to see is maybe a deal here or there fall apart with some uncertainty. Maybe they lose funding, that kind of deal, because of the uncertainty. If this continues 5 days in, I'm not sure that we're going to see anything at this point. But if this continues and it gets out of control, that's the first thing we're going to see is people pull back their investment dollars. They're going to say, cancel contract, those kinds of things, like we saw whenever COVID happened. We had lots of contracts cancel, and so that was the first thing we saw. On the residential side, what you'll see is, I was thinking about buying my dream home, and you know what? I'm just going to stay where I'm at right now and wait this out and see, which really makes our current situation even worse than what it already is as far as inventory. So, any uncertainty is going to affect both. I would say it's more directly affects commercial quicker, but residential, it does in that way, indirect way, that people just kind of want to hunker down instead of making a move in uncertain times. But right now, we're not seeing any issues with commercial or residential transactions. But like I said, if it was to escalate and continue on, especially with all the sanctions, these sanctions can affect different markets that actually end up affecting us in America, and we don't realize it, especially on the commercial side, where they may be getting funding that was indirectly supported by something that now it has a sanction on it, could kill that deal. So hopefully that helps you kind of understand what the conflict in Ukraine could possibly do for our real estate markets here. Again, I don't think that's an issue right now. Well, I know it's not an issue right now. I haven't seen any contracts cancel, anything like that. But let me give you an update on the residential market. Let's go ahead and start there today with residential. So local builders filed 3,223 new house permits in December, which was more than 27% more than the year earlier. So homes are starting to ramp back up. One of the things I want to talk about on all the new construction of homes is not only are just homes to sell ramping back up and builders ramping back up on permits, but 25% of those permits are for rentals. So the new trend and thing is they're building these homes and these communities and the whole subdivision, and it's a rental community. It acts more like an apartment complex. So we just don't have enough housing, whether it's rentals or just buying a house. We don't have enough housing, and so that's created this demand for these type of rental communities where you could kind of have the home life, but you're renting instead of having to buy the house. So you'll be seeing much more of that coming in the next year, delivery. We actually are managing some properties like that. So it's a new thing coming to DFW Metroplex. I know DR Horton has 8 or 9 communities they've committed to doing that with. So just another way to live here in the Dallas Metroplex, and give an option, because I'm going to talk here in a minute about multifamily and what's going on there. We're just not seeing enough building. But let's continue on in residential. 20 more homes built than last year. 20% more homes, new homes, are being built than last year. Home sales were down 4%. Most of the Metroplex saw close to 20% growth, oh, this is actually the wrong. I was thinking that sounds familiar to my update last time. Hold on here. Let me go back over. Sorry about this. Let me. Gotta be able to see it. I can't see very well because I'm getting old. Okay, so let me start over. That was last month's update. So here, residential market update. Average house payment, because of the interest rate increases over the last few months, is up by 351%, which is about 30% more than a year ago for the same price. For the average home price or home monthly payment is up $351, at 30%. So affordability is beginning to take issue. It's an issue at hand for buyers right now, and that's usually the first thing is what it causes buyers fatigue, for buyers to start pulling out to allow more inventory to come in. Yet we have not seen the buyer completely pull out. The inventory is doing nothing but going the other direction, less inventory at this time. Area home prices rose over 26%, and that's the highest year-over-year gain we've ever had in North Texas. Dallas area rents are up 18%. That's the biggest increase we've ever seen. DFW is leading the home building market, so we're building more homes here in DFW. There's more people, more businesses than we can even speak to. I'm like a broken record. Every time I do this market update, that's the news. And that pendulum has shifted, and it's not going to shift back. So get used to it, DFW. Record low inventory, down 27% in Rockwall, 50% in Dallas County. So that is just mind-blowing to me. January of this year versus January of last year, in Dallas and Collin County, inventory was down 50%. Last year's when we started seeing all the lines wrapping around open houses and just showings, and you can't even get into the homes because there's so many people looking at the homes because the inventory was so low, and we're 50% lower than that. 27% in Rockwall County. So it's ranging. Now, the Kaufman County is seeing a little bit of an uptick because they're building more homes in Kaufman County. There's more room to grow there. And in the southern part of the Metroplex as well, Ellis County is another one. So when we look at the overall picture of what is going on with the residential update. So one of the things we need to look at is that last month, prices averaged 26 for North Texas, but Rockwall County prices were up 28.8%, 29%, almost 30% over last year, which last year was a crazy year. And so we're seeing just unbelievable amount of showings, unbelievable amount of offers, all of them. It's all going over asking price. I would never have thought that we would see what we're seeing. $100,000 on a $200,000, $300,000. It's $100,000 more to buy that home this year. So when you start thinking of those things, these are crazy price appreciations, and it's like, where's the relief? Where's the relief for the buyer? Sellers, we're all singing hog heaven. Well, I don't see relief for the buyer. I think we see relief over this type price appreciation growth, but I don't know when that's going to be. I keep trying to guess that we're going to see some normalization sometime this year. I think in the rise of interest rates is going to start that normalization, because that 30% more monthly payment is just going to pull buyers out. And so that'll allow more inventory to start building at some point, but they're going to have to get pretty aggressive, it sounds like, based on the demand here in our Metroplex to get us to a more normalized growth, because really the March interest rate hikes that are planned are already priced into the market. They're priced into the interest rate market. That's why the price of mortgages went up so much, and we hadn't even raised the rate. So my point is I'm thinking it's going to take quite a bit of interest rate, being pretty aggressive on the interest rates, to slow down this DFW Metroplex, because we have so many people relocating here, so many businesses relocating here, that these prices are going to be a norm. Not 28% growth, but this price, and I constantly get asked that. When's the big correction coming? Are we going to ever have a buying opportunity? Well, yes, we'll always have a buying opportunity, but the buying opportunity might be a year from now at today's prices, because the housing pricing in this area is here to stay. It's not leaving with the amount of people and demand we have. So that's what we're seeing on price appreciation. Just a general summary. The median price, single family homes in North Texas, it was up 4%, the amount of sales, but in most areas, sales are down in like suburb areas. Days on market down 24%, pending sales down 12%, listed for sale down 30%. That's average, and we're seeing as high as 50% in Dallas and Collin County. So residential market, more of the same. Home prices are going up. We're seeing, one of the things to think about is if you have investment properties, we have a lot of, we do property management, so we have a lot of investors that are packaging up their homes and selling it. You've got big buyers right now that'll buy them. Or you can just ride it out and see how much more this is going to carry out. But, we're definitely in a good, probably at the upper end of the market. I would have said the same thing last year, though. So, a market you can look like a genius if you get it right, or you can look like a fool, but most of the time the market's going to make you look like a fool. We just have so much demand that I don't have confidence in saying that it's not going to be higher next year. Interest rates is the big thing. How aggressive are they going to get on interest rates? And that will be the thing that might give us some more inventory, and there is a good chance of that. So that's why we've seen a lot of investors selling properties to just take advantage of this frothy market that we're in. So there's a residential update. I'm going to give you kind of a general update on commercial. Again, DFW led the nation in commercial sales. Number one, surpassed New York City because of all the migration this way. One of the things, the Crescent, everybody knows the Crescent in Uptown. It sold for $700 million. One of the top sales in the whole country. I remember seeing that going up, thinking it'll be interesting to see what that'll sell for. Amazon is putting another distribution center in. They already have 12 million square feet here, from Kaufman County on to the other side of Fort Worth. But this is going to be south on 20, and it's another million square feet. Just distribution capital of the world, I feel like here. DFW inflation read, most recent inflation read, is a little higher than what we're seeing nationally. 7.8%, which makes sense with housing and oil and gas and just the demand that we have here, that we'd have a little higher inflation that we're experiencing. Another piece of news: Los Angeles to lose its largest. LA loses its largest publicly traded company headquarters to us, which is it's a mega engineering firm worldwide known. AECOM is the name of it. That's another 1,200 people. So that's another 2 or 3 subdivisions right there in one company moving over. Think about that. And we're not talking about families. We're talking about employees. So each one of those has a family. That's just one company. Multifamily construction, this is what I want to talk to you about, is down over the past 2 years. So, a lot of construction's up, but multifamily is down. The news is that a lot of it is supply chain issues and labor issues. So getting the product and then getting the labor to do the work, which is a huge part of it. And I would also argue that land and development of land, availability of multifamily land, is very difficult to come by. That's every investor we talk to. If you come across any multifamily land, let me know, because lots of cities have had their stomach full of multifamily. So getting something approved or that's even already zoned multifamily is nearly impossible to find these days. It's out there, but it's very difficult. So between all of that's constraining construction, where pre-pandemic, we're still down as far as construction permits for units. And what's interesting about that, though, is I remember pre-pandemic levels, before all of the migration to the Dallas-Fort Worth, Texas area. I remember reading all the multifamily projections and thinking that we're going to be peaking out on supply because we had so much supply compared to the demand of multifamily. But now that we've had such huge migration this way, that news is completely changed. We don't have enough inventory. That's why subdivisions are going to the multifamily model and leasing the whole subdivision. These builders are doing that. So, it's real interesting what's happened, and I hope you understand what I'm saying, that and remember the story that basically COVID just kind of put this on steroids, growing the Dallas-Fort Worth Metroplex with restrictions and all the things that they've been doing in the eastern and western portions of our nation that people just got tired of, and on top of taxes. And so it's always been taxes. Taxes has always been a big migration to Texas, but between all of that, it's just, and I'm not saying that because that's the way I'm bent politically. It's what I hear, story after story of businesses that we're moving here, of people that we're moving here as a real estate firm. So that's the market. In general, interest rates are rising. It's going to affect residential more than commercial investment. And so that's what the big question mark is. How is that going to moderate our residential prices? How is that going to slow down commercial investment? And so it's going to be interesting to watch over the next few months as they try to get inflation in check. And inflation is the key thing to watch. If inflation starts to come down without too much interest rate, then be ready for more of the same here in the Dallas-Fort Worth Metroplex. So that's my market update. Thank you for watching. And again, if you need any real estate help, we're a full service firm. We want to be your one-stop shop, but at a high level for residential, commercial, and property management services. Reach out to us. We'll look forward to helping you. Thank you.